Do you know anything about the worst economic crisis since the Great Depression? Excessive risk-taking by international financial institutions harms the economy, and predatory lending practices are directed at low-income homeowners. Let's see whether Charlie Munger's predictions hold water in this video. Let's start the video. Charlie Munger has been quite vocal about the economy, inflation, currencies, and geopolitical dangers in meetings and interviews this year. Here are some jaw-dropping remarks from the famed 98-year-old investor regarding the dire state of affairs and the coming potential dangers. Chapter 1. Charlie Munger Predictions. Charlie Munger said, "While I was a student at Harvard Law, we seldom traded above 1 million shares a day. The amount of money we exchange now is in the billions. We can get along just fine without such a fluid stock market. We're getting horrible excess and potential harm to the nation, but no one seems to mind it. It's like when a group of people get drunk at a party. They're having so much fun that they don't stop considering the repercussions. Getting carried away like this is unnecessary. You might make the case that the terrible excess of the Roaring Twenties led to the Great Depression, which in turn led to the rise of Hitler. There is a lot at stake here. However, the challenge is substantial. A drunken brawl is popular with many. Indeed, up to this point, they are the ones who have the upper hand. Many individuals are profiting from our fight." Charlie Munger said,
"When you throw money, when you print money on the scale that modern nations are printing it, Japan, the United States, Europe, etc., we're getting into new territory in terms of size. The Japanese bought back not only a lot of their own debt, but a lot of their common stocks. So the Federal Reserve System, you can't imagine how much money printing Japan has done. And they haven't had all that much inflation, and it's still a very admirable civilization. In fact, you could argue that Japan is one of the more admirable civilizations in the whole world. And in spite of all this very extreme government money printing they've done, and they haven't had terrible consequences. Now they've had 25 years of stasis with living standards not improving very much. I don't think that came from their macroeconomic policies. I think that came from the rise of tough competition for their export powerhouse from China and Korea. But at any rate, it's weird what's happening, and nobody knows for sure how it's going to work out. I think it's encouraging that Japan could print as much money as it has and remain as civilized and calm and admirable as it has. And so I hope to God the United States has similar happy outcome. But I think the Japanese are better adapted for stasis than we are. I think it's a duty-filled, civilized bunch of people, a lot of them older, not many young people, and they just suck it in and cope. In our country, we have terrible tensions. It's way harder to run a country which is not mono-ethnic like Japan. There's some professor at Harvard that has written extensively on this subject. It's way harder to run a nation like the United States with different ethnicities and groups and so forth than it is to run Japan. Japan is basically sort of a mono-ethnic civilization which is proud of its ethnicity, and of course they can cope with its troubles better than some other people can.
Munger says that the current inflation is different from what Volcker battled, and that governments do not appear to have the same determination to accept economic pain to combat inflation. When controlling inflation, Volcker was given free rein to implement whatever measures he saw necessary.
When Volcker, after the 70s, took the prime rate to 20% and the government was paying 15% on its government bonds, that was a horrible recession. Lasted a long time, caused a lot of agony. And I certainly hope we're not going there again. I think the conditions that allowed Volcker to do that without an interference from the politicians were very unusual. And I think in 2020 hindsight, it was a good thing that he did it. I would not predict that our modern politicians will be as willing to permit a new Volcker to get that tough with the economy and bring on that kind of a recession. So I think the new troubles are likely to be different from the old troubles.
Chapter 2. Crash Predictions by Munger. Charlie Munger said, "Because all those problems are real, and it's so tempting to get rid of debt by giving a guy a non-interest-bearing account. We have a severe problem, and the easiest solution for politicians and the Federal Reserve is to print more money to deal with the short-term effects. There will be consequences for a long time if it continues." We all remember what happened in Germany when the Weimar government simply kept printing. In a word, yes, you don't want a bunch of politicians to do whatever is simple. And since it didn't hurt us before, they figure it won't hurt them this time either. We all know that if you keep doubling and doubling and doubling your government, you'll end up with something very different. That being the case, you're likely to put yourself in harm's way if you don't exercise some self-control. Charlie Munger once said,
"What brought in Hitler was the combination of the Weimar inflation, where they utterly destroyed the savings of the middle class in Germany, followed by the Great Depression. It was a 1-2 punch. And Hitler came in, crazy demagogue, with 40% of the votes, and pretty soon we had a dictator hell-bent for World War. So the history is not pleasant. And Germany was a very advanced and civilized nation, the Germany that Hitler took over. So if you let your nation deteriorate too much, what you get is a Hitler. We've proved it. In my whole adult life, I've never hoarded cash waiting for better conditions. I've just invested in the best thing I could find, and I don't think I'm going to change now. And the Daily Journal's used up its cash. Now, Berkshire has excess cash, quite a bit of excess cash. But it's not doing that because it thinks it knows how to time investments. It just can't find anything it can stand buying. If you stop to think about it, my way in life was not predicting little short-term differences between the Russell and the Standard & Poor's index. I'm always just looking for something that's good enough to put Munger money in, or Berkshire money in, or Daily Journal money in. And I figure that I want to swim as well as I can against the tides. I'm not trying to predict the tides. If you're going to invest in stocks for the long term or real estate, of course there are going to be periods when there's a lot of agony and other periods when there's a boom. And I think you just have to learn to live through them. And as Kipling said, treat those two imposters just the same. You have to deal with daylight and night. Does that bother you very much? No. Sometimes it's night and sometimes it's daylight. Sometimes it's a boom, sometimes it's a bust. I believe in doing as well as you can and keep going as long as they let you. It may be that you have to choose the least bad of a bunch of options. That frequently happens in human decision making. And the Mungers have Chinese stocks through Lilu, a little bit of Daily Journal stock, and a bunch of apartment houses. Do I think that's perfect? No. Do I think it's okay? Yes. I think the great lesson from the Mungers is you don't need all this damn diversification. That's plenty of it. You're lucky if you've got 4 good assets. I think the finance professors that sell the idea that perfect diversification is professional investment. If you're trying to do better than average, you're lucky if you have 4 things to buy. And to ask for 20 is really asking for egg in your beer. It's very few people have enough brains to get 20 good investments. The shareholders who are worried about the future because it looks complicated and difficult, I want to say to them what my old torts professor said to me, Charlie. He'd say, "Charlie, tell me what your problem is and I'll try and make it more difficult for you." And he did me a favor by treating me that way. And I'm just repeating his favor to you. And you're worried about the right things. All you people that are worried about the inflation and the future of the republic and so forth. Inflation is a very serious subject. You can argue it's the way democracies die. When democracy dies in Latin America, inflation is a big part of it. So it's a huge danger once you've got a populace that learns it can vote itself money. if you overdo it too much, you ruin your civilization a lot.
When a government devalues its currency, it threatens its citizens' ability to acquire goods and services and save for the future, posing severe political dangers. When a strong man in the West comes to power, he often pledges to fix the country's economic woes in exchange for his followers' undivided loyalty. His forecasts include more than simply the stock market's demise. He also warns of economic collapse and the possibility of political unrest. Chapter 3. Currency Going to Zero. Charlie Munger said,
Well, I think the safe assumption for an investor is that over the next 100 years, the currency is going to zero. That's my working hypothesis.
Billionaire investor Charlie Munger, Warren Buffett's partner at Berkshire Hathaway, recently indicated that serious problems were coming from markets at the Daily Journal's annual meeting earlier this year, stating, "The results are terrible to waste and potential harm to the nation. Because of the awful excess, serious problems will arise at some point. This is how things have always gone in the past."
If you look at the Roman Republic, and even after they went to an empire with an absolute ruler, they inflated the currency steadily for hundreds of years, and eventually the whole damn Roman Empire collapsed. So it's the biggest long-range danger we have, probably, apart from nuclear war.
He then elaborated on his definition of wretched excess. The massive short squeeze in GameStop was undoubtedly a heinous overspend. Bitcoin is certainly a horrible overkill. There has never been anything like what we are doing today. I would say that venture capital is flinging money around too quickly, and that there is a sizable and unpleasant excess in venture capital and other types of private equity. We know from other countries' experiences that attempting to print too much money leads to challenging times. A more dire disaster awaits us than in the past, although it may be quite some time before it arrives. This was all from my side to guide you about the big economic crisis predictions by Charlie Munger. Please subscribe to this channel and press the bell icon if you're new to the channel so you don't miss any new stuff.